Good morning, trading world. It is February 24th, 2023, and this is my pre-market outlook and technical analysis for day trading the markets. This morning, we are going to go back and quote from prior pre-market outlooks this week to see how we should be already prepared for today. Going back to Tuesday's pre-market outlook video, this is a direct quote. We are going to walk price action down a lot, then a little more until we have breached the lower end of the current major channel we are in. Then, as if we had just rolled out of bed in the middle of the night, we are going to shake it off on a primary expiration day and explode super high, taking back all those losses for the week in a single day. End quote. Now, later in the same outlook, I went on to say this week could give us a surprise to the downside first, dipping our toe into the deep end of the pool this week. Just when you think we are pulling up and out of it, Friday could be a brief shock even lower. End quote. So from here, there are only two options that I see. Either we, one, have the beginnings of a huge down day and bounce, then midday experience a drop a bit lower than we have experienced all week. Two, we have the beginnings of a huge down day, but start to consolidate and go into what would be considered a blow-off top, which is a powerful rally that will see VIX rise as price action rises at the same time. Now, what concerns me from this point is the higher time frame charts and where their cycle ends up on the day. Remember, true market crashes happen from already oversold points, when everyone is on one side of the trade looking for the bounce and we don't. And that causes the panic and ensuing get me out at any cost, and adding to that sell side activity as people who were looking for the bounce and had bought positions on the long side have to turn tail and just all of a sudden sell those positions at whatever just to get out. That's what causes the panic. And that is the anatomy of a crash. So, like I said, this is what concerns me. Where we end up on the day. I don't really see a super crash at this point, but we can all be surprised. Looking at the daily time frame, the MACD is still above the zero line, which means there is enough activity out there to still form some buy the dippers, and the algos would still back that action at this time. And that gives us that huge action that could come into play for that blow off top, where we get down here and people get that one last gas buy, and that could drive us up here on the RSI back up to this level somewhere. Also, on the weekly, this is my concern right now, because the weekly chart, we're at a very pivotal level where we're reaching back up to what could be bullish activity, but we're coming from a bearish trend. So this is that kind of pivotal level where either we could go and explode higher, and we could kind of get out of this to where this could be the beginning of another bullish move, or this could be the head fake where this rolls over and we get back into that bearish trend on the weekly time frame. So it's a big moment in time for everyone as we kind of look to see how this plays out in real time. From there, let's get to the key levels on the day. Before I get to the key levels of the day, I just had to mention this. As you can see, I was coming down. I'm on a 4-hour chart now. And on the 4-hour chart, I just want to be clear that if you're chasing moves today on anything less than a 4-hour chart, I mean, it's okay to look at lower time frame charts to see your exact entry and to see your cross recross or whatever the pattern is that you look for your entries. But if you focus too much on anything lower than a 4-hour today, you will get ate up. So make sure to keep your primary eye on something higher, or at least a 4-hour chart time frame. And I know we're all trading intraday, but from experience, when markets get to these points, even I follow divergences in the market. That is primarily what I do. That is the primary signal of the things that I do, following internals and looking for those divergences in price action between the internals. And even following those right now on lower time frames can fool the heck out of you right now. So just as a reminder, just because I have been there, these are the times where you will eat up an account looking for an entry because the lower time frame shows you that reversal coming, and it never comes. If you're looking at anything less than a 4-hour, that's why it never comes. It just tends to eat and eat and eat, and that divergence will build and build and build until we get to where we need to be on the proper time frame. That's why I say VIX, when it goes above 23, it's like pushing a fast forward button. It takes moves that normally happens in days, they happen in hours. Things that normally happen, or ranges that usually take a week to play out, it can happen in days. So be very, very careful on what you're watching. I just wanted to get that out of the way before I went into the key levels of the day. All right, and here we are back with the key levels of the day. Starting on the resistance side, we have our Jack resistance at 399 to the 400 area. And Queen resistance 401 to the 404 area. This is going to be really important today, seeing how we interact or reject from this area and whether we get multiple rejections. And then our King resistance area. Originally I wrote 405 to 408. However, if we get a blow off top, and depending on what time it starts, the only thing that is stopping this today is whatever time the bell rings on the market. So if we're at 410 when the bell rings, it's going to be 410. That's the high. So like I said, if we get a blow off top, there is no limit. You know, we could see going up, but like I said, I have 408 as that kind of level in place, but really wherever it stops when the bell rings. All right, on the support side, we have our Jack support at 397 to the 396 area. 396 is going to be critical today, because if we consolidate and we start that divergence off of that 396 area, it's going to tell us a lot from that day and how we bounce up off of this 396 area. Our Queen support is 395 to the 394 area. King support 393 to the 392. Remember, the major channel we are in, I know I'm skipping ahead a little bit, but the main channel we're in is from 397 up to 416. And per the quote, the very important quote that I went back and I wanted to make sure everybody heard from Tuesday is that we are going to walk price action down a lot and then a little more until we have breached the lower end of the current major channel we're in. That major channel lower end is 397. Now, today could be that day that we breach and kick the door open and we venture all the way down here to 392 and make that V bottom somewhere. Where was I? Okay. The main thesis for today is bullish, closing above the 466 with a projected target high of between 400 and 407. If we get to that 407, that 407 is just there. It's not concrete like it normally is. If we have a blow off top today, again, the target level is wherever we are when the bell rings. Now, the alternate thesis is bearish, closing below the 466 with a projected target low of between 399 and 392. The main channel we are in, again, it is from 397 up to 416. The main channel below goes from 397 all the way down to 379. Yesterday, market strength and breadth gapped up, fell immediately, reversing midday, forming a rounded reversal type pattern. I expect a similar thing or a similar day today. We do have harmony between the technical side, which is bullish, and the quant side, which is bullish, but it only makes for a more explosive alternate thesis. Because we're in rare air today where it is definitely higher time frame controlled today. We're talking your 4-hour, daily, and weekly. And remember, I keep saying this, but a VIX over 23 only makes for hitting like a fast forward button. And that fast forward button makes ranges that would usually happen over a day go from happening in a day to an hour. And ranges that would usually take place over a week play out in just a matter of days. So normally I would go into the scenarios from here, but I can only see two things happening from this point. Give me just a moment to bring that up. All right. Normally, I do day types and scenarios, but in anticipation of a VIX going above 23, we can kind of forget about day types for a moment, because the VIX above 23 speeds things up, as I continue to say this morning, where we could see two different day types in one day. So that's the reason whenever we have this explosion in VIX, or we start toppling up above a certain area in the VIX, it throws everything off a bit. So I'm trying to prepare you for that, and it wouldn't make sense because it's going to be hard for me to explain that we had a trend day down to this point and then, a trend day up from this point. So we're going to just look at the scenarios. I'm not going to put a probability on it because it is not. It is basically a binary day. Either this happens or that happens. So that's how, in my models, I'm looking at things play out. So the first scenario is that we open, gap down, begin a consolidation, and that consolidation will have a bullish divergence that just builds and builds. And when I say divergence, as price continues to make lows, you're going to see your indicator, or whatever it is you follow, whether it's internals or RSI or stochastic, any indicator like that, you're going to see it start this kind of mild incline, pulling away from price action. As price action continues down, you're going to see the divergence build and build and build until all of a sudden we're going to get a boom, and we're going to take off like a rocket and don't look back. That is pretty much a blow off top. Now, it could play out that way, or we can get scenario number 2. All right, scenario number 2 begins almost the same as scenario number 1. We open gap down, begin a consolidation that will have a bullish divergence. However, if we get to mid-morning and begin to stall and form a bearish divergence up here at the 400 to 404 area, we could have a midday drop going lower than we went all week, and out of what seems like nowhere form a sharp V-shaped bottom and begin to come back up. So those are the scenarios that I'm looking for, and I should have corrected scenario 1 a little more. We could have kind of a smaller V-shaped bottom here in the consolidation part, closer to the morning or pre-market or what have you. But those are the scenarios that I'm looking for, so be very, very, very careful of how you play things. Make sure to keep your risk in line, because when we start playing in these higher time frame models, we can move a long way very fast. We can start to see, even on the SPY, 3, 4, 5 point bars in a matter of minutes. So be very careful. This is not the time to play and step out on the edge and risk things other than what you would normally risk. As a matter of fact, you only need to risk half of what you normally risk, because you can make twice as much. So again, as I always say, your most important job as a trader is to protect the capital that you already have. And we do this by knowing and understanding the risk and times that we're in. And the time that we're in, you need to understand one thing. You only have to risk half as much to make twice as much. So be very careful. This is that risk planning that I speak of all the time, and knowing and understanding your risk and managing that risk in accordance to your account size. Again, I hope this helps. Wishing you a positive trading day. Let's go out and make it a great one. Be safe.